we're in the endgame, which is a process. And last Friday, Russia announced that they're going to be buying other strategic commodities, and top of that list was silver. It would immediately bleed into the gold market, and you'd see prices go dramatically higher, and that's going to be your loss of confidence. That will be your signal, and investors, central banks, et cetera, worldwide are going to see that type of move as a complete loss of confidence, and that will literally destroy the ability of the Treasury to continue borrowing.
Since the pandemic, gold has outperformed most other major asset benchmarks, including global equities, government bonds, and commodities. In an era marked by more geopolitical instability, gold's status as a tangible, jurisdictionally neutral asset that can serve as collateral in various markets becomes increasingly significant. Reflecting this movement, central banks globally have been accumulating gold at a rate unseen for generations. Renowned gold and silver analyst Bill Holter, known for his candid assessments of the financial markets, recently offered a bullish outlook for precious metals, particularly gold. He noted that the gold rally began in October last year, coinciding with the U.S. government's decision to weaponize the dollar and the SWIFT system. This strategic move included commandeering over $300 billion in Russian treasuries, which sparked significant concern among central banks worldwide. Looking ahead, he believes we are in the endgame of this process. In a dramatic shift in its central bank investment strategy, Russia has ramped its gold reserves to historic highs, defying Western sanctions and reinforcing its economic fortress. As of October 1, 2024, Russia's monetary gold reserves have surged by $10.95 billion, a staggering 5.8% increase, reaching an unprecedented $199.764 billion. Gold now represents a record-breaking 31.5% of the country's total reserves, marking a bold move in Russia's economic strategy amid global uncertainties. Holter emphasizes that Russia views gold as the Achilles heel of the dollar. He points to a 2004 photograph of Vladimir Putin proudly displaying a 400-ounce gold bar, highlighting that Russia has long recognized the critical importance of gold. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 20% of you are subscribed, and we aim for 1,000. Your support will make a big difference.
The gold rally started in October of last year, and that was when the U.S. basically weaponized the dollar, weaponized the SWIFT system, and said that they were going to basically commandeer 300 plus billion of Russian treasuries. And what that did was you had central banks all over the world, sovereign treasuries all over the world, looking at that and saying, well, wait, if they can do that to Russia, they can do it to us. What that's done is it kicked off huge buying worldwide from central banks trying to protect themselves, trying to fill their balance sheets up with something that will fill in the losses that are surely going to come from their dollar holdings. So just understand that's what's happened over the last, call it 1 year now. That's the reason for the rally. As far as what I'm looking at now, I really think we're going to see in a very short period of time, we're in the end game, which is a process. And last Friday, Russia announced that they're going to be buying other strategic commodities, and top of that list was silver. And I've been on the record for over 10 years now that when this thing finally breaks, it would be a failure to deliver in the silver market. It would immediately bleed into the gold market, and you'd see prices go dramatically higher, and that's going to be your loss of confidence. That will be your signal, and investors, central banks, et cetera, worldwide are going to see that type of move as a complete loss of confidence, and that will literally destroy the ability of the Treasury to continue borrowing. Russia absolutely understands that gold is the Achilles tendon to the dollar. I mean, you can go back to 2004 and you'll find a picture of Vladimir Putin holding up a 400-ounce bar with a big grin on his face. They've known all along that the Achilles tendon is gold. And what they're doing by making this announcement last Friday is they're putting further pressure on the gold shorts because they're expanding their purchases into, like you said, platinum, palladium, silver, and that is going to directly conflict with the shorts in those markets. And those markets are much, much smaller than gold. Silver is probably the smallest. If they go into the marketplace and say, buy me, pick a number, $50 million worth of silver, silver's already in a huge deficit. And what they're doing by announcing, and then if they actually do start buying, is they're going to tip the scales, and that will lead directly to a failure to deliver. That pulls the pants down on the West and shows that the whole thing is a fraud.
The United States currently holds nearly $35.7 trillion in federal debt, a figure that is expected to continue rising regardless of whether former President Donald Trump or Vice President Kamala Harris is elected next month. Data indicates that even if each U.S. household contributed $1,000 per month to pay off this debt, it would take 22 years to eliminate it entirely. Meanwhile, interest payments on the national debt are projected to reach $892 billion in 2024, according to reporting by Econofact, which exceeds the amount the U.S. is expected to spend on defense. Holter believes that this apathy factor is currently holding society together. However, he warns that significant market declines of 50%, 60%, or even 80% could shatter this complacency. He advises individuals with debt to pay it off, although he points out that this won't fully shield homeowners from increasing property taxes. Holter asserts that the best strategy to safeguard wealth during such turmoil is to purchase physical gold and silver. Now let's redirect our attention to a video.
There's almost no unrest now, if you will. And that's because people come home, they look on their computer or open their mail or whatever, and they see their account balances. And there's many people, and I'm going to use the word complacency or apathy. People are apathetic or complacent simply because they look at their account statements, whether it be outside monies or 401k monies. They look at the value of their house and they say, well, yeah, all of this stuff is really ridiculous, dangerous. It's coming out of Washington, but it doesn't affect me. So I think there's an apathy factor, if you will, that's still at this point holding society together. But if you see 50, 60, 80% drops in markets and the same amount of drops in people's balances in accounts that they hold, and they see that, they live on a street with 20 houses, and all of a sudden 13 of them are up for sale, and they're all, lowering their prices to try to get out. That's where society is going to break. If you have debt and you can pay it off, pay your debt off. It's still not going to completely protect your house because you're going to have to pay taxes on an annual basis. And only Lord knows where and how high those taxes are going to go. Will you be able to afford it, or are you going to have to walk away from your house? We're already seeing that in like South Florida with the homeowners association fees. I mean, some of these people who bought condos 15, 20 years ago are getting bills in the mail of $250,000. And you're going to have people walking away, and those bills are only going to get bigger because your portion of what's left gets bigger. And as far as preparing, you need to prepare for, I'm going to say, a minimum 6 months time where you may not have water, you may not have electricity, you certainly aren't going to have food. I mean, this thing goes down. There's not little elves in the back of your grocery store that bake loaves of bread. Everything gets shipped in, and nothing, when credit breaks, nothing's going to move. To get out of the system with your wealth, there's only really one way to do that, and that would be to purchase physical gold, physical silver, hold it yourself, or have it vaulted in a non-bank private vault. Do not put anything into a safe deposit box, because when your bank goes down, if you ever get to see that safe deposit box again, it'll be empty next time you see it.
As global power dynamics evolve, Russia is strategically positioning gold at the center of its monetary future, enhancing investor confidence in its resilience against economic, political, or diplomatic challenges. Recently, U.S. Treasury yields have dropped to their lowest levels in over a week, making gold more appealing, especially in a low-interest rate environment where it typically performs well. According to the CME FedWatch tool, traders are currently anticipating a 96% chance of a 25 basis point U.S. rate cut in November, further bolstering the case for gold investment. What do you think about the idea of using physical gold or silver as a hedge against economic uncertainty? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.